Over the past 2.5 days, that is during February 5th, 6th and 7th, the Monetary Policy Committee reviewed the macroeconomic and financial conditions and prospects and voted by a 4:2 majority to reduce the policy repo rate by 25 basis points. The MPC also voted unanimously to shift the policy stance from calibrated tightening to neutral. I would like to take this opportunity to thank the MPC members for their extremely valuable contributions and the richness and high quality of the discussions that we had. I also would like to thank our teams in the Reserve Bank who provided inputs and support at various stages of the policy formulation. Let me begin by setting out the key developments that the MPC considered while arriving at the policy decision. The MPC noted that global growth is slowing down across key advanced economies and in some major emerging market economies as well. World trade is also losing momentum. While international commodity prices, especially of crude, have recovered from their December lows, they remain soft. In consonance, inflation has edged down in major advanced economies and many emerging market economies. Global financial markets have regained poise from heightened turbulence in December, with equity markets paring earlier losses, bond yields easing in the emerging market economies, and emerging market economic currencies appreciating, aided by a weaker US dollar. As regards domestic macroeconomic developments, the MPC noted that the CSO has placed India's real GDP growth at 7.2% in 2018-19, with gross fixed capital formation accelerating, but consumption expenditure moderating and net exports improving. More recent high-frequency indicators point to investment demand losing some pace in the third quarter of 2018-19, while credit flows to industry remain muted. On the supply side, output from agriculture and allied activities and services is expected by the CSO to decelerate in 2018-19. Rabi sowing up to 1st of February has been lower than the previous year, but it could catch up in the remaining part of the season. There are few days left for the sowing in this regard. The extended period of cold weather in this year's winter is also expected to boost wheat yields. In the industrial sector, activity measured by Index of Industrial Production (IIP) slowed down in November, even as capacity utilization in the manufacturing sector increased above trend. Survey-based indicators point to weakening of demand conditions in the manufacturing sector. High-frequency indicators of services sector suggest some moderation in the pace of activity. In its assessment of inflation developments, the MPC noted that headline CPI inflation declined to 2.2% in December, the lowest print in the last 18 months. Continuing deflation in food items, a sharp fall in fuel inflation, and some edging down of inflation, excluding food and fuel, contributed to the decline in headline inflation. Moreover, inflation expectations of households have softened by 80 basis points for the 3 months ahead horizon and by 130 basis points for the 12-month horizon. Producers assess that inflation in prices of farm inputs and industrial raw materials eased in Q3, while growth in rural wages moderated. On the external front, export growth was almost flat, while import growth slowed in November and turned negative in December 2018. Consequently, the merchandise trade deficit for April-December 2018 was shade higher than its level a year ago. Although higher services exports and low oil prices should have a salutary impact on the current account deficit in Q3. On the financing side, net FDI inflows to India during April-November 2018 were higher than a year ago. Foreign portfolio flows turned negative in January 2019 after rebounding in November and December 2018. India's foreign exchange reserves were at US dollar 400.2 billion on 1st February 2019. Turning to the outlook, the MPC took into consideration these developments and revised the path of CPI inflation downwards to 2.8% in Q4 2018-19, 3.2 to 3.4% in H1 2019-20, and 3.9% in Q3 2019-20, with risks broadly balanced around the central trajectory. GDP growth for 2019-20 is projected at 7.4%, in the range of 7.2 to 7.4% in H1 and 7.5% in Q3, with risks evenly balanced. It is noteworthy that the path of inflation has moved downwards significantly over the period of next 1 year. Headline inflation is expected to remain contained below or at its target of 4%. This has opened up space for policy action. Meanwhile, investment activity is recovering, but supported mainly by public spending on infrastructure. The need is to strengthen private investment activity. Private consumption also needs to be buttressed. While bank credit flows have picked up and overall flows to the commercial sector have also picked up, they are yet to become broad-based. The favorable macroeconomic configuration that is evolving underscores the need to act now when it is most opportune. In pursuance of the provisions of the Reserve Bank of India Act as amended in 2016, it is vital to act decisively and in a timely manner to address the objective of growth once the objective of price stability as defined in the Act is achieved. The shift in stance of monetary policy from calibrated tightening to neutral also provides flexibility and the room to address the challenges to sustain growth of the Indian economy over the coming months, as long as the inflation outlook remains benign. The decisions of the MPC in this regard will be data-driven and in consonance with the primary objective of monetary policy to maintain price stability while keeping in mind the objective of growth. Now let me turn to some developmental and regulatory policies that have been announced, which complement the monetary policy stance and action. Several measures are being proposed in areas spanning financial markets, regulation of banks and non-banking finance companies, regulation of payment and settlement systems, and financial inclusion in the Statement on Developmental and Regulatory Policies, which is Part B of the Monetary Policy Statement. These policy actions will be anchored by the goal of financial stability so that the soundness and efficiency of financial system in intermediating the economy's needs of financial resources for productive purposes is preserved at all costs. With regard to financial markets, the Reserve Bank proposes to modify foreign exchange derivative regulations, that is Regulation FEMA 25, in order to improve access and participation by promoting operational ease and removing regulatory differentiation based on residence, product and type of transaction. 2. A task force on offshore rupee markets will assess the causes underlying the growth of this market and recommend measures to encourage non-residents to access the domestic market. 3. Interest rate derivative directions would be rationalized with the objective of simplifying regulations and reducing prescriptive stipulations to promote liquidity by encouraging participation, product innovation, and by easing access norms. 4. A draft regulation of financial benchmarks is proposed, which is based on the practices recommended by international standard setting bodies and lays down governance, quality and accountability standards for administrators of significant benchmarks in the markets regulated by the Reserve Bank. 5. The provision that no foreign portfolio investor shall have exposure of more than 20% of its corporate bond portfolio to a single corporate is being withdrawn to encourage a wider spectrum of investors to access the Indian debt market. 6. Resolution applicants under Insolvency and Bankruptcy Code will be permitted to avail external commercial borrowings under approval route to lower their cost of funding for repaying outstanding rupee loans availed by the companies undergoing the corporate insolvency resolution process. This is expected to improve the overall effectiveness of this process. Proposals relating to regulation of banks and NBFCs include 4 points. First, revising the definition of bulk deposit as a single rupee deposit of rupees 2 crore and above instead of the earlier threshold of rupees 1 crore and above, in order to provide greater operational flexibility to banks in raising such deposits. 2. Establishment of an umbrella organization for urban cooperative banks that can provide several services so as to enhance public confidence in the UCB sector, provide regulatory comfort and promote financial stability in an interconnected financial system. 3. Harmonization of 3 separate categories of NBFCs, that is asset finance companies, loan companies and investment companies, which together constitute almost 99% of the NBFCs in terms of numbers, by creating a merged category called NBFC Investment and Credit Company, NBFC ICC, in order to address the complexities associated with multiple categories of NBFCs and to provide NBFCs greater flexibility in their operations, which would result in diversified product offerings and better access to NBFI services. 4. Alignment of risk weights of bank exposures to all categories of NBFCs other than CICs with their credit ratings, with a view to facilitating credit flow to better rated NBFCs, lowering the cost of bank borrowings for NBFCs and in turn for end-use consumers, particularly borrowers of MFIs. Proposals relating to enhancing financial inclusion include 2 points. First, enhancing the limit of collateral-free agricultural loans from rupees 1 lakh to rupees 1.6 lakh, keeping in view the overall increase in inflation and the rise in agricultural input costs. This is expected to enhance coverage of farmers in getting access to formal credit. Setting up of an internal working group to examine and recommend measures to address issues pertaining to policy framework and delivery of agricultural economy in the country. On the payment systems, the feasibility of bringing payment related activities of payment gateway service providers and payment aggregators under direct regulatory ambit of the Reserve Bank will be examined. This is considered necessary given their increasing importance in the evolving structure of payment systems in the country and the fact that at present they are essentially regulated indirectly through the banks with whom they have tie-up. Thank you. We'll now take questions. I'll just a moment, please. Sure. We'll take questions. Since you have started, okay, I'll start here. Then probably I'll go this way and then come back this way.
Right.
Yes.
Governor Swati Khandelwal from Z Business. Congratulations to you and MPC members, क्योंकि आपने एक अच्छी पॉलिसी दी है जो मार्केट पार्टिसिपेंट्स वेलकम कर रहे हैं. पहला सवाल सर, बॉन्ड मार्केट कॉन्फिडेंस को लेकर अभी भी कंसर्न्स है, और दूसरा लिक्विडिटी क्राइसिस की जो अभी बात हमने पहले की थी, अभी भी कंसर्न्स हैं जहां एनबीएफसीज या एसएमईज की बात कर रहे हैं. तो उस पर आप क्या व्यू रखते हैं, हाउ डू यू थिंक आप उसको टैकल करेंगे वो सिचुएशन को? और दूसरा, since the time you took charge 12 दिसंबर से you've done marathon meetings, बहुत सारे stakeholders से आपकी meetings हुई है. Broad points और issues क्या निकल कर आए from that time till now, और उनके क्या solutions propose किए आपने?
Okay, there are three questions. I'll answer two of them and leave one to my colleague, Deputy Governor Viral Acharya, with regard to the bond markets. Now, my interaction with the various stakeholders, that is banks, public sector, private sector, the cooperative banks, we have had meeting with NBFCs. A number of suggestions have been made. We have tried to understand the issues and problems which they have brought to our notice. They have also given suggestions. Each of the suggestions is being examined, and wherever appropriate, we are taking action. Some of the points which were made during these meetings and the action taken on them are reflected in part B of the statement which I made.
Sure.
Now, with regard to liquidity, I have already said that Reserve Bank is continuously monitoring the liquidity situation, and based on requirement, we will ensure that there is no liquidity scarcity. Yes.
Governor, good afternoon,
Just
Governor.
a moment before, I think on the bond thing you would like to say.
Yeah, I'll just compliment what Governor said. RBI has been injecting system-wide liquidity through open market operations. It has already given the calendar for 3 weeks of February, week 2 to 4, for 37,500 crores of durable liquidity to be injected. And presently, actually in February, the system liquidity position is in surplus. So my sense is there is liquidity for those who are able to get it from the lenders.
Sir, ये liquidity
good afternoon, Governor.
I've just this way I've started. मैं आ जाऊंगा, please.
Nivrita from
I'll come
Business
back.
Television India. Governor, we just had the budget announcements come in last week, so this was an interesting timing for the MPC meeting. How concerned is the MPC about the inflationary impact of the kind of policies that were announced in the budget? And also, how concerned is the MPC about fiscal slippage? To that end, has there been any discussion, any approval from the audit panel for an interim dividend from the RBI as well?
You see, so far as the inflation outlook is concerned, I think it is quite extensively covered in our statement which we have issued, and the statement which I made, we have made this point. We have given our projections. The MPC has given its projection with regard to inflation, and in the next 12 months horizon, including the current quarter, it is expected that the Q3 of next year will end at 3.9%. So therefore, the impact of various budget proposals and other developments have been factored into our projections. With regard to the interim dividend, as and when the central board takes a decision, it will be announced. And the third thing you asked is about, with regard to the fiscal slippage, as I mentioned, that has been discussed. The possibility of fiscal slippage. The government has said 3.4 and this year and 3.4 next year. That has also been factored into our inflation projections, and we are working on the basis of those numbers. Please.
Governor Lata Venkatesh from CNBC TV 18. Since you say that inflation will not rise above 3.9% for all of calendar 2019, did the MPC consider a double cut, in the sense 50 basis, or do you think the space exists in 2019 itself, because the forecast is highest would be 3.9%? As well, since you all spoke about OMOs, if it is already in surplus, will you all continue with OMOs? What will be now would you have some visibility about April and May as well?
You see, so with regard to OMOs and the liquidity infusion, it will depend on the evolving situation. And this is an assessment which is, regularly made. Not just monthly or fortnightly, but it is almost every week or every day we make the assessment. And whenever there is a requirement, we will infuse the necessary liquidity into the market. We will take into account there's a dividend payment also which is coming up, and that is under, the interim dividend payment has been mentioned, and that's a matter which the central bank will consider and decide. And depending on the evolving situation, the Reserve Bank will infuse liquidity whenever necessary. The other point which you mentioned,
since it's already surplus, I'm asking whether you will consider tapering OMO. Since liquidity is in surplus,
no, that
will
is
you
the position.
consider
That is at the moment. That is the position, and to some extent it has been tapered in the month of February, because first week we did not do an auction, but then we have maintained the auction size per week at 12,500 crores. But again, it depends on the evolving situation. I would not like to prejudge the situation. Whatever is our assessment of the liquidity requirement, we will infuse that. And with regard to the inflation, I mean, with regard to whether the MPC considered 50%, higher 50 or 70 or whatever, a higher rate cut. Now, there are several discussions which take place in the MPC, and I think as and when the minutes are given out on 21st of February, I guess, I think it will be known, and it is not proper, and it will not be proper and fair to say what was discussed and not accepted. So
my question was, does space open up for a cut further in your assessment, because the highest inflation you see is 3.9?
No, I have, I think, covered this aspect in the statement which I read out. If you go through it very carefully in the, in the video footage, I think you will get a better clarity. Yes, please. I'll come. Where is that gone? This one. You want me to read it again? Where is that statement?
It was just before you...
So considering the cut is back to neutral, what would be the kind of room
No,
for
I think I
further...
read it. I think I gave sufficient clarity. But since you are saying, I'll just read out that portion again for better clarity of all of you, and also, I think, the viewers. I have mentioned that the shift in stance of monetary policy from calibrated tightening to neutral also provides flexibility and the room to address the challenges to sustain growth of Indian economy over coming months, as long as the inflation outlook remains benign. The decisions of MPC in this regard will be data driven and in consonance with the primary objective of monetary policy to maintain price stability while keeping in mind the objective of growth. I think this is the position which clarifies. Yes.
Afternoon, Governor. Maithili Busrumar from ET Now. I have a question. Did the MPC consider the hygiene of the fiscal deficit number announced? 3.4% is what we have on paper, but did it consider there's so many off-budget items that do push up the fiscal deficit? And you mentioned, in fact, that the budget proposals are likely to boost aggregate demand, but the full effect of these is likely to be felt over a period of time. Likewise, your monetary policy measure also will be felt, in fact, over a longer period of time, because monetary policy acts to a lag of typically 4 to 6 quarters. So is there a possibility of both monetary policy and fiscal both being expansionary at the same time? Or did you think that the economy needed such a big boost at 7.2? Does the economy need a big boost? What was it that really moved your mind? Because you talk about fuel, which is volatile. One cannot take the lower prices for granted. Inflationary expectations, given the kind of coverage that we have, RBI has in its inflationary expectations model, both these cannot really be relied on. So what was it that really convinced you to go for growth rather than inflation at a time like this?
You see, the RBI Act interprets, the RBI Act says that price stability has been defined under the Act as 4% plus minus 2. Now, once that target is on board, we are on board with regard to that, and in the next 12 months horizon, if we see that the inflation remains at 3.9 or maximum of 4% or below, then I think there is room to act. And the Act also says that keeping in mind the objective of growth. So therefore, the decision of the MPC has not done anything which goes beyond the Reserve Bank of India Act. And we are also saying, as I read out in my statement, that the decision of the MPC will remain data driven, and the primary objective of monetary policy to maintain price stability, that remains very much in focus. And I'll just say, and with regard to the fiscal, we have assessed all the all the aspects. the various measures which have been announced, we have analyzed the transmission time that each of the announcements would take to have an impact on the ground level. That also has been factored in. And also the calculations showed that the 3.4% in the current year was actually about 3.37%, if I remember correctly. And the 3.4% of next year is about 3.35%. So therefore, that also has been kept in mind. And we have gone by these numbers. We have analyzed the expenditure measures announced by the government. We have also analyzed on the revenue side, we have analyzed how GST is playing out, what is the future outlook with regard to GST collections, which we expect will pick up because the initial bottlenecks and various changes in the entire systems and procedures, they have been, I think, they have been almost entirely streamlined now. And the GST collections are also likely to, show better growth. I think budget itself has projected certain growth. So all these aspects have been taken into account. And with regard to the off-budget items, I think that is a matter for the fiscal administrators to decide. I would not like to comment on that. There is considerable debate these days in the media space about PSBR, but that is something which is for the government to consider. PSBR as of today, I think is still just in the, the public discourse, the public debate has just started. So at the moment, I think to address your question, I think it's for the fiscal administrators to really take a view on that.
Governor Sanirban Nag from Bloomberg News. Two questions. You seem pretty pessimistic about growth expectations, especially the high frequency data showing some slowdown in growth. Why have you retained your growth at 7.4%? And secondly, on inflation projections, why is the RBI consistently getting it wrong as far as undershooting of inflation going on?
Okay.
Is the time to reconsider your inflation models?
Okay. Now I'll ask my Deputy Governor Viral Acharya to reply to your question. But before that, I would just like to mention that I would not like to sort of attach adjectives to our inflation projection, whether it is optimistic or pessimistic. We work on the basis of numbers, and our analysis threw up certain numbers, and we have shared that with you. Viral, you would like to?
Yeah, I think on the projections, of course, this is a continuous lament of a lot of observers. I think I'll just mention 3 to 4 things that I think you should keep in mind. First, at least over the last year, the headline inflation has averaged almost exactly at 4%. So while you may have issues with the specific level of projections, there have been errors on the other side which have actually delivered an inflation of 4%. Because I think what should have happened is that if the rates were kept very high relative to our expectations, actually the inflation should have come down even further below 4%. But there have been errors on the other side, especially in core inflation, which have actually delivered. So I think you can't just take one aspect of what we do and sort of cherry pick that and say somehow this edifice is not working. That's one. I think the second point I would say is that if you look at internationally on inflation projection errors of various central banks, you observe 2 distinct patterns. One is that food is always the volatile component in all economies. And in economies where food is a bigger proportion of the basket, these are the central banks that tend to make larger errors. So I think, in fact, we've done some study which shows that once you control for the fact that Indian food basket is very volatile in inflation and that it has a very large proportion in our headline, actually the relative errors that the central bank here makes are actually not that out of line with sort of what happens elsewhere in the world. Now, having said that, I think we should take this criticism seriously, and I think we do. We are actually internally quite introspective about all of these, as I said, the lament that we keep hearing on a persistent basis. And I think what we have done over the last year is now we have specific subgroups of our modeling teams that focus on individual food items. They try and get a sense through our regional offices of what are the mandi arrivals, etc. in various items. We try to get an early sense of what the CSO number might look like. And essentially, if you look at the large surprises, they have been related, of course, a few years back to demonetization, but of late they seem to be related to a supply glut. And I think that's a point we have mentioned in the resolution. Both domestically and internationally, in a large number of items, there is a supply glut. Now, just from a modeling sense, you get the supply numbers once a year. The official statistics. Now, to use that to actually have a real-time projection of these food item forecasts is not easy. And therefore, as I said, we've started a little bit of grassroots work. We are talking to agri-specialists, agri-economists in the country to get a better sense. So hopefully we'll get better with time. Thank you.
See, we have, I mean, as Deputy Governor Acharya mentioned, we have had extensive consultations with a lot of experts over the last 2 months or so. And the effort is to fine-tune the system as much as possible. And I move to the next question, if any. But may I request that please avoid the multiple questions, you know, because 2-3 questions from each, then we'll have to come back. I think everybody has to get a chance.
Sir, this is Anup Roy from Business Standard. I have a question that government is now asking for previous year's surplus also, apart from the interim dividend. So how do you take it? And also this practice of breaching fiscal deficit using taking dividend from RBI. What's your take about it?
You see, payment of surplus or dividend from RBI is a part of the, you know, there's a legal provision. It's a part of the RBI Act, and we are not doing anything beyond what is there in the legal provision. Now, how the government uses the proceeds of RBI dividend or surplus, as you call it, is government's decision they have to take. And with regard to what government has asked, I think let's not go by speculation. And there are several issues, you know, which are under correspondence, which are under discussion between the government and the Reserve Bank. These are all discussed and a decision is taken. And the Reserve Bank, you know, any decision of the Reserve Bank is always driven by certain principles and certain accounting norms. So we will have to, you know, follow those principles.
It's not speculation. Finance Minister has given it in written writing, written reply.
As I said, you know, all the decisions of the Reserve Bank Central Board will be based on certain principles and certain accounting norms and practices.
Thanks.
Yeah.
Hello, my name is Ken Koyanagi with Nikkei from Japan. I see it rather unusual that you guys have cut rate under the tightening stance. And is it fair to say that it reflects a sense of urgency that inflation rate may eventually go below the target range, which is below 2%? Or is it just an adjustment towards growth neutral policy rate? How do you characterize this rate cut?
Would you like to take this question?
Yeah, so, you know, I think the right way to see it is that we've experienced fairly extraordinary volatility in crude oil prices over the last 12 months. If you just recall, right, when we all met in October policy, the expectation of the market was that we were actually going to raise rates at that time, and we did not. And we moved to a calibrated tightening stance. Since then, oil prices have collapsed. The food prints have been particularly benign because of the supply glut conditions. RBI was very proactive in revising its projections from October to December by a very significant 50 to 70 basis points at various quarters. However, you know, central banks do move in small steps. So we thought, given that the oil had just eased after the October policy, it wasn't prudent to actually withdraw the calibrated tightening stance right away in December itself. I think, having said that, I think whatever discussions happened at this press conference in December were more or less viewed by everyone as an effective neutral stance at that point of time. So I think you should just keep that perspective in mind, that we've experienced fairly large shocks on oil and food in a very short amount of time. One point and one sentence I would like to stress that is also mentioned is that at least as per some of the output gap measures, there is a small opening up of output gap, that the actual output has gone slightly below the potential. And as Governor said, because the inflation trajectory is kind of below the headline rate, the committee as a whole believed by majority that there was space for a rate cut as well this time.
Yeah. So is it fair to say this is...
So if I can just, so it's not a reflection of urgency at all in that sense.
I think we'll go to the next person. Please cooperate, because everybody has to get a chance. Yeah.
Just a clarification on the first and the food bit. Is there some element of farm distress that we are seeing in these numbers? It's a conversation that keeps happening. Is there some element of farm distress that is also playing around with the way farm numbers are showing up? And on the other thing, on allowing IBC linked companies, the people who are taking over those companies to access FX bonds and use them in India, there have been companies that have come in, gone through the process of NCLT and and bid for companies and been selected, and then some of them have disappeared. Is there an opportunity for some people to play the market by setting up companies offshore, bringing in FX money into the country to use that? As in, I'm just raising a question on possible misuse of the end-use.
No, I think the resolution under the IBC is done by the NCLT. And before it goes to the NCLT, there is a committee of creditors which assesses and follows certain transparent procedure to select, the new promoter or whoever wants to come in. So therefore, I do not think this our decision will give room for any kind of fly-by-night operator, if I may use the word, to bring in money just for the sake of bringing in money. In any case, there are other other openings of bringing in money. We have the ECB route, we have the FPI route. So therefore, it's a well-regulated kind of resolution process, and only the resolution, the companies which have been identified under the resolution process, only they will be able to get it.
No, just to clear that, because there are already companies that have not made payments for companies that they had already won the bids for. It's already a problem because there's a 365-day, now plus delay in some of these companies, and you're losing value on that. That's why my question was raised. Also on the
no, we do not anticipate that kind of a problem to develop.
Okay. Yeah. And on the food bit, sir, the farm distress.
No, farm distress, I mean, there's been, I think let's leave that point for discussion in a larger context, and let's focus on the announcements that we have made today, in the monetary policy and also in part B of my statement, because if we open up other areas of discussion, it is endless. Next one, please.
Good afternoon, Governor. This is Samir Hashmi from the BBC. First of all, it's great to see that you're taking so many questions, so that's a good sign here.
So please cooperate by being brief.
Okay.
So
my simple question is, how concerned are you about India's economic growth next year? You've projected it at 7.4%, but if you still look at many indicators, whether it's private investment, consumption, they've not been very healthy. And also, how closely are you watching the global economy, because that's expected to slow down? There are already talks of Fed actually now cutting rates because US growth is expected to slow down in the coming months.
You see, we are monitoring the external situation very closely. You will see it in the MPC statement which we have issued. We have discussed about the external factors. In my statement also, I touched upon it briefly. And concerned about growth, we have at this point of time made our projections. There are several, upside and downside risks to growth. And so it is very difficult to sort of really at this point of time say beyond what our data shows.
But the big concerns, sir, I was saying, any big concerns you see for the Indian economy?
Big concern, I mean, one is the monsoon. I mean, it is a no-brainer. One is the monsoon. The second one is the crude oil prices. And these are the primary, and the overall external situation, how there are issues of around, let's say, Brexit, how it is playing out, how the US economy is recovering. There are trade conflicts which are also, which it is expected will get resolved, but we do not know how much time it will take. So these are, obviously the risk factors which will have impact on our domestic economy, and we are regularly monitoring that. Yes, please. So I come back this side then. Please. Huh?
Sorry, Subhashri from Reuters. I wanted to know what is the appropriate real interest rate for a neutral stance, and what is RBI's projection about the potential GDP growth rate? And sir, regarding the measures that you have taken for NBFCs, is there any AQR that you are expecting that you want to do for the NBFC sector as well?
I think NBFC thing I will ask Mr. Vishwanathan to reply.
See, the NBFCs are subject to on-site inspection on an ongoing basis. So it's not that we don't have an inspection. That we'll maybe where it's a larger inspection, we may want to intensify in some of those cases.
Yeah, so the other part of the question, DG Acharya can.
Yeah, I have never been a fan of pinning down a specific number on these things. They do keep changing. In fact, the only way monetary policy can actually affect real outcomes is if temporarily it has some impact on the real interest rate. So this thing does move around. I think there is a little bit of, I would say, preoccupation with, what is the RBI's preferred real rate of interest. I would actually say that we don't work with targeting a specific real rate of interest. Our target, as Governor stressed, is to examine how the monetary policy changes would get transmitted to the real economy. It depends on the specific conditions at a given point of time, and actually, depending upon what the situation is, whether you are cutting rates or raising rates, the hope is that you may actually be playing around exactly with the real rate of interest in the economy to either stimulate or bring back some of the economic activity out there.
Thank you. Yeah, we come.
प्रदीप पंड्या CNBC आवाज से, और आपसे रिक्वेस्ट होगी कि अगर हिंदी में आप जवाब दें। अभी तक आपने जो OMOs किए हैं उसकी वजह से बॉन्ड यील्ड्स नीचे आए, तो कुछ बड़ी कंपनीज के लिए, बैंक्स के लिए फंड सस्ते हुए, सरकार के लिए सस्ते हुए, लेकिन जब हम NBFC से पूछते हैं तो उनकी कॉस्ट बढ़ गई है। जब हम छोटे व्यापारियों से पूछते हैं तो पिछले 3 महीनों में कई व्यापारियों का यह कहना है, SMEs का, लिस्टेड कंपनीज का भी यह कहना है कि उनकी फंडिंग कॉस्ट 1%, 1.5% बढ़ गई है। तो अब आपने जो रेट कट किया है, आप कैसे इंश्योर करेंगे कि सभी के लिए रेट कम हो और EMIs लोगों के जो बढ़ गए हैं वो भी कम हो? और एक दूसरा सवाल मेरा यह है कि आपने 3 बैंकों को PCA से भी बाहर किया, क्या ये लिस्ट और आगे बढ़ेगी? कितनी जल्दी हम उम्मीद कर सकते हैं कि कुछ और बैंक भी इस संकट से बाहर आएंगे ताकि और लोगों को लोन मिल पाए?
The first question was what he said about
सारे रेट्स, लेंडिंग रेट।
इसी देखिए जो रेट बैंक्स जो रेट में इंटरेस्ट, जो इंटरेस्ट रेट में बैंक लेंडिंग करते हैं वो उनका मार्केट, उनका डिसीजन है। इंटरेस्ट रेट क्या कौन सा रेट में, इट ऑल डिपेंड्स ऑन द रिस्क परसेप्शन ऑफ द बैंक्स विथ रिगार्ड टू इंडिविजुअल बोरोवर। एक इंडिविजुअल बोरोवर का कितना स्ट्रेंथ है, कितना उसका बैलेंस शीट फ्रेजाइल है, कितना how depending on the strength of the balance sheet, wo jo the bank has to take a call. It depends on the banks, and that is a function which is between the banks and the NBFCs, or between the NBFCs and the individual borrowers जहाँ के इंडिविजुअल लोन्स दिया जाता है। तो उसके बारे में हम कुछ नहीं कहना चाहते हैं कि वो इंटरेस्ट रेट बढ़ गया है या कम हो गया है, क्योंकि दैट इज इंटरेस्ट रेट डिटर्मिनेशन आपको मालूम है कि इट इज़ लेफ्ट टू द बैंक्स, वो डिसाइड करेंगे। और जो PCA बैंक्स का है उसके बारे में आप DG मिस्टर जैन से मैं रिक्वेस्ट करूँगा वो रिप्लाई दे दें।
I think we are very clear that as long as there is some improvement in the benchmark parameters, then it will be examined at the appropriate time.
तो क्या आप उम्मीद करते हैं कि ये इम्प्रूवमेंट जल्दी होगा और कुछ और बैंक बाहर?
नहीं, मैं कोई ऐसा प्रिजम्पशन नहीं करूंगा। जो 3 बैंक्स को लिया उनका वी वॉच देयर परफॉर्मेंस, पिछले कई महीनों में उनका जो सारे पैरामीटर्स में उनका परफॉर्मेंस कैसा रहा है उसको बिल्कुल डिटेल एनालाइज किया, और एग्जामिन करने के बाद वी आल्सो टुक इनटू अकाउंट जो कैपिटल इन्फ्यूजन हुआ है सरकार के तरफ से उसको भी एग्जामिन किया, और ये 3 बैंकों को हमने बाहर ले लिया। मैंने जैसे MPC के बारे में भी कहा, सारे जो डिसीजन है वो डेटा ड्रिवन होंगे, इसमें कोई डिस्क्रेशन या ऐसा कोई उसका स्कोप नहीं है। सारे जो डिसीजन है चाहे वो PCA बैंक्स के बारे में हो या अदर मैटर्स के बारे में हो, दे विल बी डेटा ड्रिवन।
सर, मेरा पहला जवाब भी अगर आप पूरा कर दें कि अब इस डिसीजन के बाद जो आपने आज रेट कट किया और स्टैंस चेंज किया, क्या अब आप उम्मीद करते हैं कि बैंक्स के डिपॉजिट्स और लेंडिंग के रेट घटेंगे, लोगों की EMIs कम होगी?
इसी मॉनेटरी पॉलिसी मीटिंग के बाद रिजर्व बैंक और बैंक्स का एक मीटिंग होता है, तो हम देखेंगे अभी अगले विद इन द नेक्स्ट 2-3 वीक्स हम सारे बैंक्स के साथ एक डिस्कशन करेंगे. ये हो रहा था पहले. दिस इज नॉट द फर्स्ट टाइम दैट we will have an interaction with all the banks. We will discuss with them because interest rate determination, we only set the policy rate. बाकी कितने लोन कितने interest rate में banks extend कर रहे हैं वो उनका flexibility है, उनका decision है. तो हम उनके साथ interact करेंगे. Then at that point probably we will get a better sense.
So, good afternoon, Govardhan from the Economic Times. The MPC statement touches on this core inflation where health and education could be a one-off phenomenon, and that seems to be the basis for the forecast of 3.9% inflation for the next year, Q3. What made you conclude that it is a one-off phenomenon? And if that is the case, you still have almost 200 basis points positive real rates, which is probably the highest. Does that mean that we can conclude that we are into a kind of a downward rate cycle?
You see, education and health we have analyzed in detail. We asked our regional offices also, the RBI's regional offices, to interact with the, with the NSSO, to interact with the state level evaluation departments. Every state has its own evaluation department. So we have interacted with them. We have also tried to gather data from the pharmaceutical companies. We have also tried to gather, our teams, regional offices have tried to gather data with regard to in education where exactly the prices have possibly gone up. And we have done a fairly wide state-wise analysis, and we see this happening in about 7 or 8 states. And but there are reasons why perhaps it has happened. And once the prices have, it is this education rates, perhaps, the pharma prices, there are certain seasonal factors also. There are certain factors relating to the supply and availability of certain brands of medicines. So various factors have gone into it. And we do not think or believe that these prices, whether it is the tuition fee in private coaching classes or it is the price of medicines branded or the other kinds of medicines which have been sold, we do not think that the increase which was seen would be sustained over a period of time. Another reason which people have told us, I cannot certify that. Another reason which people have told us is that I think in many sectors in the rural areas, this is the first time that the NSSO volunteers have gone for data collection. Perhaps that has led to better capture of data. This is what many people have told us, but I have no way to certify or confirm what they are saying, whether it is correct. You would like to add anything?
Yeah, I think I'll just add a small point to what Governor said. I think we have said, if you see the uncertainties, paragraph 23, that the unusual spike is something that we will closely watch. So I think this was also the point I was making earlier. When you get a large surprise, you have to give it a little bit of time to fully understand it. So as of now, it has been treated as a one-off phenomenon. We have to see whether it's truly one-off or whether if it persists, we'll have to see what to do about it.
Thank you.
Thank you, Governor. Mayur Shetty from the Times of India. Governor, in the past, whenever the risk weightage has been reduced for any particular sector, it's been counter-cyclical. So this time, I believe some of the NBFCs will see a reduction in their risk weightage. So was this because you all felt that there's going to be some kind of a drop in bank lending to NBFCs?
Actually, this was an aberration in the risk weight system. All other NBFCs had their exposure rate risk weight linked to the risk weights already. So this was a part of harmonization. So on the one hand, we are trying to harmonize the number of NBFCs. You said that 3 types of NBFCs are being brought into one category. So it's part of the segueing into an overall harmonization of the risk weights. It's to be seen as a part of general harmonization and reducing complexities in the regulatory framework.
But as far as bank exposure is concerned, do you all see that going down in future?
No, I think I have touched upon that. That there is credit growth in certain sectors, as I mentioned in my statement, that it is not broad-based. So that is also we are closely monitoring. Now, since we are running out of time and we need to cover.
Yeah, Governor Anand from Business Today.
We need to move quickly. Please switch off the mic.
Governor, the foreign exchange cover for imports, I've seen it has gone down, from 11 months to some 9 months, and we have also seen the foreign exchange reserves, from a peak of 420 or 428 has gone down below $400 billion. So is this an area of concern, and how do you look at it?
No, I think the reserves, as I gave the figures today, it is 400.12 or the figure I gave it earlier. So we have $400 billion as reserves, and it is quite substantial for us. So I do not see any any risk in that front. And we have also today liberalized the FPI also, this 20% limit which we had put. We have also, as you know, come out with a revised comprehensive revised guidelines for ECB. So we do hope that all these things will facilitate greater inflows.
Thank you, sir. Manojit Shah from The Hindu. Monetary transmission has been a headache for RBI for a very long time, particularly when the rates are being revised downwards. Now again we are starting a rate cut cycle. How concerned are you with monetary transmission? That is my question. And what will you, if there is a concern, how will you address it? And the other issue is that we will be completing 1 year of February 12th circular next week. There has been demands earlier, and there has been demands now also to make certain changes to the circular. What is your view on the February 12th circular?
You see, at the moment there is no proposal to modify the February 12th circular. With regard to the other point you said, monetary transmission, yes, whenever there is a policy rate reduction, monetary transmission, it would be RBI's expectation that monetary transmission does take place. We will have, but again, we have to keep in mind that the lending and the fixing of the rate of interest is a function of the banks. We will be having an interaction, as I mentioned, in the next fortnight or so. We will have a meeting with the CEOs and MDs of all banks, and we'll be discussing these issues, including the issue of monetary transmission, and let's see.
Vajayanti from New Indian Express. I'll have supplementary questions to what...
Okay, that's Shaktikanta Das speaking with the press, a much longer than usual RBI Governor commentary post policy.